Hi and welcome to another Ask Michael Anything video. I originally got a question from David Sue and it's very relevant to today's lending environment where David said, hi, would it be worth taking a principal and interest loan as opposed to interest only because it would be a lower interest rate and I could refinance later to access the principal? Or should I take an interest only loan where higher rates are available? David, thanks for your question, and I guess it really depends upon which stage of your investment career you're in. If you're at the beginning of your investment career, I'd prefer to have the flexibility of an interest-only loan and be prepared to pay a little bit more, knowing that that's tax deductible, because the intention really is to keep growing your portfolio and being able to refinance it. So any extra payments you'd be making or any extra spare cash you've got available, I would rather you put them into an offset account. So on balance, you're paying interest on the net amount in your account. So it's a bit like repaying the principal, but it's yours to access whenever you want without asking the banks. Now today, interest-only payments are more expensive than principal and interest payments, so you've got to do the sums because sometimes the lower principal and interest payments make serviceability, which is a big factor with the banks today, easier. In other words, you can get more of a loan if you pay principal and interest. So there's not one size fits all, except as I say, in general, for beginning investors, I'd like you to have control of your money rather than the banks, because you say, yes, I can redraw it later and access the principal, or maybe you can, maybe you can't. It really depends upon what's going to happen with lending criteria and serviceability criteria in the future. But if you have it in an offset account, well, that's yours to redraw whenever you want. Having said that, as you're further into your investment career, one of the roles is to lower your loan to value ratio. So remember, the first stage of your investment career is to build an asset base. The second stage is transitioning by lowering your loan to value ratios, and paying principal and interest at that stage of your life is no issue at all. And then the third stage, of course, is living off your property portfolio, and my preferred strategy is still living off the equity of your portfolio. So there's no simple answer to your question, because at the moment there are some opportunities with very low principal interest repayments where it does make sense to do this and break my rule of having complete access to your funds in an offset account. That's why it's important to sit with a professional finance strategist, not any mortgage broker, and definitely not just a bank manager who won't understand this, and work through the various scenarios and see which works best for your investment stage at the moment. Thanks for your question, David.